It's the end of the trading week and time to look back at the events and data which have been affecting the markets. Joining me is Ranko Berich, Head of Market Analysis with Monex Europe. Well, yesterday, Ranko, we saw the Bank of England Monetary Policy Committee back plans for a comprehensive shake-up and greater transparency in the presentation and explanation of its policy decisions. Will these changes be effective?
I think the particular changes that were announced yesterday and the ones that will be implemented in August next year are basically just window dressing. So essentially all that they're going to do is release the minutes of their meetings at the same time that the decision is announced. So yes, it does reduce a little bit of the potential for confusion where a decision is announced and then the minutes seem to contradict the decision, but the fundamental problem is still there, which is that markets are seeking explicit forward guidance from central banks, including the Bank of England, and the reality is they can't provide explicit forward guidance because they don't know the exact path of monetary policy.
Greece's ATHEX composite fell almost 13% on Tuesday, the biggest drop for the index on record. This comes after the government said in a surprising move that it would bring forward presidential elections to December 17th, potentially setting the scene for snap elections in early 2015. Far-left party Syriza is currently leading the early polls, and it seems likely that they would win a snap election. So what does this mean? How bad was Tuesday's collapse?
So Tuesday's collapse, yes, in terms of how big the move on one day, in terms of the one-day move, it was very large and looks quite bad. But the actual stock market itself and the health of Greek government debt is actually still, some way away from 2012 crisis levels. So in terms of the size of the move, yes, it looked very scary. In the historical context, it's not quite time to start panicking yet. What the move itself means is that markets are afraid of Syriza, and rightly so, because the party has made all sorts of suggestions that would create a lot of turmoil for investors in Greece. For example, backing out of Greece's fiscal commitments, attempting to renegotiate Greece's debt with its bailout partners, and all of these things, investors are rightly concerned because they would create a lot of turmoil and potentially a lot of investments that have been made into Greece would be threatened by Syriza having more power.
Oil is heading towards its 10th weekly drop since October after OPEC decided against reducing output. As oil extended losses below $60 a barrel, what is the supply and price outlook for the commodity?
Well, the outlook for supply is continued production in the medium term. It's as simple as that, unless OPEC changes its tune. The reason that production will keep increasing essentially is that a lot of US and Canadian investment into the oil industries there is still coming online, so we'll see that production begin to increase. And as a result, the supply of the product has been increasing. Now, the reason that OPEC refused to cut production is that OPEC production costs for oil, specifically in the Middle East, are a lot cheaper than the US and Canadian sort of shale resources that have recently been flooding supply. So the OPEC thinking is that if they allow the price of oil to drop, a lot lower than it is now, a lot lower than it has been, it will then discourage future investment into the US shale industry, which has much higher production costs. So in effect, they're attempting to drop prices in the short term in order to shake out their competitors in North America so that prices can stabilize over the longer term. So what that means for oil prices, in effect, that in the medium term, they are going down.
Thanks, Ranko. It certainly has been an interesting week for the markets. That's all from your weekly wrap-up for now. Enjoy your weekend and see you back here on Dukascopy TV on Monday.